Hello and welcome to another bonus episode of the 2021 Gold Summit. This episode will only be available to subscribers to Gold Stock Fortunes. I hope you enjoy it. Today we'll be having a chat with Rich Checkan, who is the President and Chief Operating Officer of Asset Strategies International, which is an alternative investment house which deals specifically in gold bullion and other precious metals. It also dabbles in numismatics as well, which we'll get onto in a while. But anyway, Rich is a very interesting fellow. He has a very interesting background as well. This is, I think, the first gold expert I've spoken to who's actually a graduate of West Point over in the States. But anyway, we'll get right into the conversation. I hope you enjoy it. Rich, thank you so much for joining me today. How are things going in Maryland?
Things are going well, considering what we've been through over the past year or so. Glad to be here.
It's great to have you on. Rich, could you just tell us a bit about your background and sort of what you do in precious metals? Because Asset Strategies is a very big firm, and you yourself are very well known over the pond, over in the States when it comes to gold. But over here in the UK, Asset Strategies isn't quite so well known. So could you just let us know sort of what you do there and a bit about your background?
Fantastic. Start with me. I wouldn't say I took the traditional track to being a precious metals dealer. I was a pre-med student at West Point, which is the military academy here in the US. My plan was to go into the Army as a doctor and have them pay for it. I ended up liking the military and chose to be an infantry officer instead, thinking after a couple of years I'd break away and do medical school. And I never did because I enjoyed it. I stayed in about 6.5 years. I left as a captain of infantry and started doing direct sales down in Macon and Atlanta, Georgia area. And that was about 25 years ago. I was doing all right. I hated the hours because I was always gone when everybody else was free, and I was working when everybody else was, or I was free when everybody else was working. So I got a call about 25 years ago from my uncle and his partner who founded this company back in 1982. So we're in our 39th year or 40th year at this point, and said, listen, would you be interested in a change? We want to expand. We need somebody we can trust. And I answered that call as a client relations representative 25 years ago. Today, I'm president and chief operating officer. We're kind of a boutique firm. We've offered precious metals, so all precious metals, gold, silver, platinum, palladium, bars, and coins. We buy and sell. We also offer rare coins, primarily US, but we deal with some world and ancients, and we buy and sell those as well. We used to offer foreign currencies until basically governments made that unattractive. They overregulated us, and I'm sure everybody's heard of FATCA. It's not a 4-letter word, but it ought to be. It basically killed overseas business along with the strength of the dollar. So what used to be about 50% of our business in currencies kind of went away to less than 10, less than 5%. And we jettisoned that about 1.5 years, 2 years ago, and just focus on the tangible assets, precious metals and foreign currencies. And we can offer it to clients in the US, in the UK, Asia, et cetera. We have clients all over the world. We have for delivery precious metals. We can also store it in depositories worldwide, to include in the US, but in Europe and Asia as well. So we offer a lot of different options for people looking to protect their wealth, so to speak.
Right. In terms of sort of the house view that you have at Asset Strategies, and why so much of your business now is in the physical bullion of various metals, but still the bullion business. How did that really start? Why was it that bullion was something that you focused on quite so much?
That's a great question, and it comes down to my uncle and his partner, and we actually have a little story about it. I can share it with you or share it with readers if they're interested. We call it the tale of the tales. So the story, T-A-L-E, of the TAELSs, which are thin sheets of gold that are traded in Asia. Back in the 70s, before they started this company, Glenn and Michael both worked for a company called Deek Pereira, downtown DC. They were a worldwide precious metals and foreign exchange dealer, non-banking. They had private banks in Austria and Zurich and Asia, et cetera, but they focused on metals and currencies. And Mr. Deek was very well connected. So when he got wind that the Vietnamese refugees were going to be coming to America, and they had 5 different camps set up to bring them into the culture. He right away had Glenn reach out to the State Department and asked where the camps were going to be. Within a day, they had a letter from the State Department giving Deke Pereira basically awarding them as the precious metals foreign currency dealer in all these camps across the country.
Right.
So Glenn and Michael went down to Eglin Air Force Base in Florida, one of the 5 camps, and they saw from nothing, within a couple weeks, 5,000 to 10,000 refugees built up in a tent city. These folks, if you remember the pictures in South Vietnam in the mid 70s, where people were trying to jump on helicopters at the tops of roof buildings to get out.
Yep.
There were 2 different types of people. They both worked hard. They both saved their money. Some of them kept that in Vietnamese piastres. So when they were getting on those helicopters and the government of Saigon had fallen to the north, how much was all that paper they worked their life for worth? Absolutely
Very
nothing.
little.
There's zero. The government behind it was no longer behind it. It was worthless paper. So imagine working your whole life for nothing. People came with suitcases full of piastres and we couldn't exchange them for anything because there was no value there. Others had converted their wealth into precious metals, gemstones, things that could transfer across borders. Those folks who oftentimes had those thin tails, those thin sheets of gold, were able to start over, granted in a new world, in a new culture, but not from square zero. They started where they ended off in Vietnam. And that was the epiphany that made Michael and Glenn want to start this company in 1982. In the US, we're protected by weak, friendly neighbors, north and south, and oceans left and right.
Yep.
And, we've had the advantage of the world's reserve currency for many years. It's easy to think that, we're immune. But I think as we're seeing now with the decay of the dollar, given the pandemic and mismanagement and everything else, that we're not immune. And having some hard assets is absolutely very valuable to everyone.
That's an incredible story, Rich. A very sort of humbling one, really. The story of the Vietnamese refugees post Vietnam War. When you're talking about the decline of the dollar, and you do point to the geographical advantages America has, how their enemies are an ocean or 2 away most of the time, and of course we've got the dollar as the global reserve currency. What is it specifically you think that is plaguing the dollar as it exists now? Because of course we've been on a dollar reserve standard ever since 1971. It was the dollar before, even when it was pegged to gold. Everyone still was, exchanging their foreign exchange. They were storing their foreign exchange reserves into dollars rather than gold. What do you think? What is the fate of the dollar, and what do you think that's actually plaguing it at the moment?
Plain and simple, I think it's mismanagement. No 2 ways about it. Part of the problem was when we came off the gold standard. And the reason we came off the gold standard is because we were wanting to spend more money on things than we took in, and the gold was tying them down. It was restraining them. They had to balance their checkbooks every year, just like we have to do as individual citizens. The government had to do it back then. And when we went off the gold standard, no longer did we have to hold to that tether, if you will, of gold backing the dollar. And, politicians want to get elected. They want job security, so they make promises and they spend money to reward those who voted for them and keep them in office term after term after term. And I think we're seeing the effects of that over time, plain and simple. They're voting for spending that we cannot afford. Somebody has to make some hard decisions, and they're not going to do it because it's political suicide. I think that's the biggest thing plaguing the dollar right now.
Yeah, it does seem like the deficit spending of the US really has been pushed into overdrive by the pandemic. Do you think there'll be any? Do you think that's going to only continue to accelerate from here? Or do you think it will be tempered at all? What do you think? How do you think the dollar is going to be treated if we emerge out of the lockdowns and the pandemic controls and all things like that? And do you think this is going to slow down at all? Do you think that people will the dollar will become stronger as the economy improves?
Well, I think right now the dollar is stronger than other currencies because they're doing the same things, right? We're all getting addicted to debt, but it's killing our currencies. And I think we were already seeing the loss of appetite for the dollar in reserves worldwide. China, Russia have backed off. They're not buying as many, securities or treasuries as they used to. U.S. is, I think, the biggest buyer of our own debt, which doesn't make any sense at all to me. I wish I could do that. I'd be living a whole different lifestyle right now. But I think as the world looks in and sees that, they say, okay, that's not a good investment for me. I'd rather be in something else. And I think what we're moving toward is a change in the reserve currency status. I don't think China's far enough along to take that role on, but I do see us moving potentially to a basket of currencies and commodities. In effect, I think the dollar will still be the dominant currency in that basket, but it will be a switch from 100% reserve down to, I don't know, 80, 85% even. And that is a devaluation of the dollar. And it's it's the chosen method for politicians to deal with their errors of the past, rather than force it on the citizens and have them pay up in one lump sum, or bring on a depressionary period. They rather spread that cost out to all taxpayers over time so they don't feel it. But we're still going to pay the bill as individual taxpayers.
Just the other week, we saw there was a very high CPI, a very high inflation measure coming out of the U.S. Labor Department. It does seem like the cost of all spending is certainly coming to the fore, at least to some degree. Of course, the Federal Reserve would say that this is transitory and it's all going to cool down, but we'll see about that as the year develops. Do you think in terms of looking at gold from where we are now? Some people would argue that with the economy about to reopen, there are going to be all these other opportunities for investors that are going to arrive. Because there's going to be much more economic activity. Perhaps investors should not be looking at these inert, barbarous relics like gold, and instead should be investing in real business, real enterprise. Do you think that's how it's going to play out? Because with the higher inflation as we've seen it, it does seem like this is setting the stage for economic growth, but also a lot of inflation along the way, which is something we've not been familiar with for quite a few decades now.
Yeah, I think this is to gold's advantage. If you look at the commodities in general, the base metals, lumber, grains, oil, all across the board, over a year now, we've been increasing prices to the point where lumber, I think, is 200-300% increase in the past year. Lumber alone in a new house right now has caused the price to go up by $35,000 here in the U.S. for an average home. We're seeing that across the board. I go shopping, my tomatoes cost more. Produce is up, I think, 6%. I heard the figure a week or two ago. So everything that we use to make other things, or everything we use to fuel ourselves or our world around us, are costing more. So that in itself is inflationary. But I think what the governments are doing in terms of printing money backed by nothing, putting it out circulation so that there's more of those dollars or euro or yen chasing a finite number of goods and services, I think that's the second shoe to fall in terms of inflationary pressures. And I think consumers are going to have a hard wake-up call. When things open up, we'll see, but I think actually the stock market may suffer a little bit, because I think people have been staying home, spending their unemployment and their stimulus checks on betting on the stock market and driving prices up to crazy valuations. I think that's where we may see an initial impact. But gold has kind of been lagging behind, regrouping and reconsolidating after a big run last year. Probably too much too soon, to be honest with you, in terms of the way that played out. But I think gold is poised now as one of your best priced assets out there, ready to cash in on an inflationary environment.
Well, yeah, I mean, it does seem like gold is sort of, it's had its consolidation period. It sort of licked its wounds after the fall from August, and now it's sort of back coming to the fore. And especially with that very high inflation print we saw the other week, that certainly seems to be coming back into the minds and into the fore of the financial press and things like that. Rich, in terms of how business was like for you at Asset Strategies last year, I do want to ask, what it was actually like to be at the forefront there. Because I've spoken to a few bullion dealers over this very interesting sort of event we had, where it was very hard for people to buy bullion, and there was all these supply shocks going on. There were the mints shutting down from the pandemic. And there was this massive demand for both gold, silver, and pretty much anything in a bullion store that wasn't nailed down. And
Yes.
each one had sort of a different story, but it seems that there were a lot of different factors taking place. Can you tell us what it was like for you guys, just in terms of your business and what you were selling? How much people wanted. Tell us some war stories from the past 12 months.
No worries. It was a war, I guess. We were fighting the pandemic. We had regulation or restrictions in place where, we actually sent most of our staff home. We never shut down the business. In our minds, we were an essential business, financial services, but more importantly, for 38 years, we were selling people gold as insurance, wealth insurance for a potential financial crisis that they hope to never have, right? Guess what? They had one. They were out of work. They couldn't do anything. They couldn't earn a living. We had clients selling gold in order to make payroll so they could keep their employees employed and earning through the pandemic. So gold served its role last year, and a lot of people feel like the pandemic caused gold surge last year. Nothing could be further from the truth. Gold broke out after a very long consolidation period in May of 2019. And it was on the rise through the balance of 2019 and the start of 2020. And then if you can picture a fledgling gold bull market, and then you threw kerosene on it in terms of the pandemic and more importantly, I think the government's reaction to the pandemic, that just sent the price skyrocketing. It made new all-time highs last year at 20.75 an ounce, far quicker than it ever should have. Not healthy when a market moves that fast, that high. So gold had to do what it had to do to be a healthy market, and that's to retrace and consolidate. And we saw that the end of last year, first quarter this year, and is starting up again. But last year, demand was there from start to finish. It was our best year in half a decade, no question about it. Gold was coming back into favor as a wealth protection, as a hedge against inflation. And mints could not keep up. So we were constantly looking for the ways for people to own metal, fabricated coins and bars at the lowest cost and the fastest delivery time possible. But we were also doing a fair amount of selling, client selling, us buying back just to be able to fund folks that weren't earning otherwise.
Right. That is interesting. Just in terms of where we are now, Rich, because you're well connected with pretty much all of the major mints. In terms of how they're dealing with supply issues now, and being able to fabricate the bullion, where are we with that? I mean, has that all been fixed, or are there still lots of weird sort of kinks along the chain?
Not weird kinks, but practical and common sense kinks, if you will. So this is not the first supply squeeze we've run into. I remember I worked through Y2K when the world was going to end because of those extra two digits.
Right.
We had the same rush for demand. We saw the same thing the summer of 2015, especially with silver. You had Grexit blowing up, and then right on the heels in mid-August, you had the flash crash in China of their stock market. That sent people screaming for physical bars and coins. So these happen from time to time, and basically the mints get used to a level of production based on the demand, right? So I said for 5 years prior, nobody wanted gold. They were making their money in the market. They could care less about gold as any sort of protection. The dollar was strong. So the mints worked up production to meet that demand, which wasn't very much. And then all of a sudden it spiked. And at the time it spiked, they could not do what they normally would do in terms of volume, because they had to have social distancing, they had to do shift work and everything else. So it was kind of a double whammy, and we could not get enough fabricated coins and bars out to people. What all the mints have done basically is they've ramped up. Obviously, some of the restrictions have been let loose a bit so they can do more in the way of production, but they've also concentrated on what most people buy. So that's the 1 ounce coins in gold, specific bars in gold and silver. They just concentrated on what investors typically buy. So if you want to buy fractional coins, 10th ounce, quarter ounce, half ounce, virtually none of the mints are making them, right?
Right.
So good luck. And it may be forever before they start making them again, because all of their focus is on what the investors want mostly.
Right. Yeah.
But things are starting to open up a bit.
Right. In terms of when it comes to the mints actually acquiring the gold from all the major miners and from the refineries, are you familiar with how that's gone on and whether or not that's recovered totally yet?
Well, they had some issues as well. Obviously, it's tough to deliver things when planes aren't flying, right? So that had an impact. I think that's already worked its way through the system. I don't know of any of the mints that are struggling to get their hands on gold and silver. The world is not short gold and silver, but it is short investment grade bars and coins, the type of things that investors buy.
Right, right. Over here in the UK, sovereigns were one of the things that became very hard to come by. So while we do have the fractional ones, the 10th ounce Britannias and the half ounce Britannias and that, it was sovereigns in particular, which are they're only 7 grams of gold roughly. They're still in actually very very short supply to some degree. They command still a very high premium, all things considered. Yes. But Rich, looking out from where we are now, so if all of the chaos of 2020 is behind us when it comes to all the strange supply chain imbalances.
Fingers crossed.
Yeah. Yeah. God willing, everything continues to stay relatively stable. Looking out, across the expanse of the 2020s before us, and the need to own gold, as you said, back in 2020, you guys were actually selling some of the gold from your clients. You were buying it back from your clients because they needed the money, and that wealth insurance that they bought with you, they were cashing in on it, right? In terms of
correct.
the need to own gold over the next period, I mean, I'm very heavily invested in the gold market in all manner of different ways, but in terms of what you think the primary driver and the primary reason to own gold over the 2020s is going to be? Is there something specific that you see, or is it a range of factors?
I think it's primarily two things. And I've talked to enough clients over the past quarter century to tell you that no matter what they say when you ask them, why are you buying gold? They really want two things, right? So some people will say, I want a profit. Some people will say, I want wealth insurance. The reality is everybody wants both, but right. to different degrees, right? So despite what they're saying, they really want both, but to different degrees. So you have to kind of sort out what's most important to them. And I kind of weight the purchase depending on whether they're profit oriented or insurance oriented. In my opinion, always, I don't care about the pandemic. I don't care about the lull over the past 5 years in metals ownership. Everyone, in my opinion, ought to have about 8 to 10% of their worth in gold as wealth insurance. There's all sorts of studies out there done by the World Gold Council and other wonderful organizations, and they are kind of bipartisan studies where they looked at different portfolios, different mixes of stocks and bonds, different currencies, et cetera. And what they found is there's a sweet spot right around 8%, where it actually helps a portfolio generate better return while decreasing overall portfolio risk. So 10% is actually too much because it's a sweet spot. So less does not help you, more does not necessarily help you. But 10%, the math is easy, which is why we go with that number. Right. Be quite honest with you. Hard for me to do 8% in my head. So you hold that, and it gives you that protection. We look at it as a liquid store of purchasing power for that potential financial crisis you hope you never have. And I manage that the same way all along. If I have a crisis, I don't hesitate. I sell it immediately. I meet my need. And then as soon as I can thereafter, I rebuild my allocation. And I don't care if the price is up or down. So I didn't sell it when it was at 1921 at the end of the last bull market. And I didn't sell it when it was, at 250 before the start of the bull market. I filled that allocation, I maintained it. And unless I had an emergency, it still sits there to this day. profit is a different animal. And I think there's room for maybe another 10, 15%. I'm not an investment, advisor. So check with yours and be comfortable with what you're doing. But for me, I like another 10, 15% in a fledgling bull market in precious metals. I actually weight that towards silver because I like the profit potential in silver. It falls further in the bear markets and it goes higher and outpaces gold in the bull markets. So for profit, I have gold and silver, but weighted towards silver, and that I manage. If it doubles in value, if I allocate 10% and now it's 20% of my portfolio, I don't hesitate, I sell half. And if it dips and I have a 10% allocation, now it's 5, I buy more. And if I do that all throughout the bull market, I really don't care if I ever catch the top because I'm buying well and taking profits all through the bull market. And that's wonderful on every dip until the dip is no longer a dip, it's the end of the bull market. And there are some warning signs you can watch for that. And I can go into them if you'd like.
Oh, please go ahead.
So this is the big thing. It's a great strategy unless you think a dip is a dip and it's not. It's the end of the bull market. And some of the things I look for there are really kind of plain and simple common sense. That's kind of the way I do my analysis. I look at markets and I try to make sense of them. If you look at past bull markets, and you can't go beyond when we decoupled from gold, you have to look at 71 on. We have 2 bull markets. This is our 3rd. You want to look for gold's price to be 2 to 3 times the previous all-time high. So given 1921 last time, you're probably looking at $3,800 to $5,700 an ounce gold before the end of the bull market. Another commonality is somewhere around 10 years. These tend to be long bull markets. They will go up and down along the way. They'll stair step, but from start to finish, they're going to be about a decade long. And we're probably 3 to 5 years into this one. So we have some time to go. You want to look at interest rates. Now they're near zero. I don't get worried and want to get out of gold because of opportunity costs until we get to higher single digits in the interest rates.
Right.
We have a long way to go there. No question about it. You look for sentiment, and even now, sentiment is not good. Every time you see a dip in the gold market, you have people saying, that's it, gold has served its value, it's no longer important, it doesn't do its job. Well, it's still doing its job after 5,000 years. And when sentiment is poor, that's great. When it's off the hook, then you have to think about, the end of the bull market. So when your Uber driver, your, food wagon guy starts telling you, hey, did you see all the money I made in gold and silver? You might want to look for the exits. There's a number of other things. You want to look at, political and social calm or upheaval. I dare say worldwide, we're looking at upheaval right now. People are not happy with the status quo. They're acting out in different ways. That's not the environment where gold is not needed, so to speak.
Right.
So, and you really have to look for a number of these factors to come together. Another great one is the gold-silver ratio, the number of ounces of silver it takes to buy 1 ounce of gold. At the start of this bull market, we were up above 80. That's kind of a key figure. It signals the bottom of the bear market. We actually got as high as 127 to 1 at one point, which was unheard of, screaming buy signal for silver at that point. But we have to work our way all the way down to about 35 to 50 before we start signaling the top of the current bull market. So you start getting 1, 2 of these factors together, you pay attention, but it's not the end of the bull market. You start getting 3, 4, 5 of them starting to converge. Look for the exits. No longer dips at this point. Now you're worried about, getting out of your profit position, but the wealth position you never touch.
Yeah, that's a good way of structuring it, I must say. I'm so invested in gold. Well, I own so much over in terms of my own sort of net worth and just my total investment portfolio. I have so much gold that it's probably hard at this point to distinguish what is the wealth preservation, which is the speculation. Maybe, as you said earlier, it's the client wants both profit and wealth preservation. Even I don't really know which one of those I want more. But in terms of when you're looking at a gold-silver ratio, I mean, a gold-silver ratio of 35 to 50. I mean, how high do you expect silver is going to go in this bull run?
Well, again, I think a realistic expectation is, and I tend to be more conservative. So when I say 2 to 3 times the previous high, I'm looking for gold around 3,800 before this bull market's over. Divide by 35, divide by 50, and that's probably your silver price. A lot of folks look at previous bull markets and they say, oh, silver can go here. So at the last bull market, they said silver should go probably to 150 an ounce because it went to 50 an ounce in 1980. I didn't buy into that because back in the 80s or the late 70s, we had the Hunt brothers, Lebanese businessmen, and some Arab sheiks trying to corner, not even corner, but profit from the silver market. They took a huge position, drove the price higher than the bull market fundamentals should have taken it.
Right.
So I don't think that was a fair figure to compare for the future. And I think 50 last time was probably the number, and probably maybe 15 to 20 was probably more realistic for the 80s. But going forward, I think that number should be higher. And again, I don't have a calculator here, but if you want to take 3,800 divided by 50, I think that's probably where a reasonable conservative estimate is for silver.
In terms of also the white metals, so not just silver, but looking at platinum, palladium, rhodium to some
Mhm.
degree, because you guys you can sell that to your clients. This is something that you dabble in. But do you have any broad thoughts on that? Because recently we've seen palladium, rhodium especially, but and also platinum to a much more muted extent. Really started to move. What do you think is going on there? Is this a debasement story, or is it a supply demand sort of mismatch due to all of the pandemic chaos, or is it something else entirely?
It may be a little bit of all of that, to be honest with you, but there are some clear supply issues for platinum and palladium. I remember when platinum was your most expensive metal, and it's the most rare, so it would make sense. But what really hurt platinum was the drop off in diesel engine production. It
Yep.
is the preferred metal for diesel engines because they burn hotter and platinum holds up well at higher temperatures. So palladium kind of jumped into that role because diesel production dropped off and the price was so much lower than platinum. You could easily substitute palladium for platinum and save money, even though it took more ounces to foot the bill or to accomplish the task.
Yep.
At these levels, palladium's been your number one performer in the precious metals complex for like 6, 7 years now, and it's more than double the platinum price. I think manufacturers are starting to look back now at the possibility of substituting back into platinum for palladium. But you got to keep in mind, they can't just, switch the metals out. They have to retool all their production.
Yep.
So it's something they have to absolutely plan and strategize for, and they don't want to make the switch and then find out they have to switch back again to palladium. That's very cost prohibitive. So I think they're starting to look at it now, but I think they'll continue to ride up on gold's coattails. Gold is your leader. Other metals in the complex follow, and the wider idea of going green is benefiting platinum and palladium as well. And it should benefit silver in a whole lot of ways as well when you look at solar panels and things of this nature.
Yeah, during that last big platinum bull run, I remember there were a couple of the auto manufacturers in the States were planning, or at least they created the plans to substitute platinum for gold in catalytic converters, which seems really quite wild. The idea that your exhaust fumes would be dissolving gold at the back of your car. I mean, with palladium prices as high as they are, it does seem strange that it would stay up here, and that the manufacturers wouldn't want to swap it out for something else, especially with rhodium as well. I think we're looking close to $30,000 an ounce for that stuff, and it was only 1,200. I can remember in 2016. Seems really quite unsustainable, but who knows?
Just to give you an aside, when platinum was much more expensive than palladium.
Yep.
I remember it well. I was trading throughout this, but you have two primary sources of platinum and palladium in the world, and that's South Africa and Russia.
Yep.
And Russia has the upper hand, if you will, when it comes to palladium. And at the time, I want to say palladium was $120 or so an ounce, US. Platinum was up near 1,000, maybe 800, 900, something like that. And all of a sudden, Russia stopped shipping or exporting palladium. They said they were wrangling over bureaucratic quotas, this, that, and the other. I think they were just gaming the market to get higher prices for their palladium personally.
Right.
But what they did is for a full year, they didn't ship any palladium. Price went from $120 an ounce to $1,075 an ounce. It almost put Ford Motor Company out of business. Because they were committed to palladium at the time. And then all of a sudden they said, we figured out the quotas, and they started shipping a year later. And within a year, the price was back down to $200 an ounce. So give you an idea what supply impact can be on that market.
Yeah. Interestingly, I think because palladium, so there is some palladium mining going on. It's not so concentrated in Russia, or at least it isn't quite so much anymore. There was an argument that I'd seen a while back claimed that the reason why the auto companies hadn't switched from palladium back to platinum again was because, as so much of it is concentrated in South Africa for platinum production, they were thinking that the manufacturers were more sensitive to political instability in South Africa, as if they did make the big shift over. If anything, if there were any export bans for a while, it would put the entire industry at a sudden disadvantage. While palladium is slightly more spread out, and so maybe they're hedging their bets. Maybe that's what's going on. But this is probably
lesser of two evils for sure.
Yeah.
In terms of potential risk to the company.
Yeah. I'm sure when they make the switch, it'll be some massive trade secret, and it'll all be kept very tightly under wraps for a long time before we figure out what's going on.
You'll probably see the price start moving up, and inexplicably so, and that might be your first indication that something's going on. It's already in motion at that point.
Yes. In terms, when you're looking at, because you've described your thoughts on the gold silver ratio, do you have any thoughts on like the gold platinum ratio?
No, I think, a lot of people called for platinum to immediately rebound when it dipped below gold, because it happened only 2 times prior to the last time. And both times it was resolved within a couple weeks.
Right.
Platinum was back above gold. So a lot of people have made the argument, a year or 2 years after that move, that platinum is ready to go. And it's not. I think it has changed. I think that, again, the diesel demand has had an impact on that market. Substitution to palladium has an impact. So I don't think that traditional distance above the gold price is something you can count on at this point.
Right. Yeah. Those historical relationships don't, sometimes the modern world, sometimes it is different this time in that, because it's used for different things. The modern world, has come up with a different relationship for them, I suppose. In terms of,
it's the truth until the truth changes.
Right.
So.
Right. Hopefully that doesn't apply for too many things as the 2020s develop, but we'll see. When you're looking forward at gold, Rich, because $3,800 an ounce is a very high number, even I would say, as a gold investor. Do you think this becomes gold ownership? If it becomes as popular as, say, as you were saying, your Uber driver, but wanting to buy gold and things like that. Do you think there's ever going to be, a politicization of gold to some degree, or even a flirting with a remonetization of gold? Because, sadly, Judy Shelton has not been, taken on at the Federal Reserve. She's been, booted out. And she was the closest you would get to anybody who was interested in sound money at any central bank, really. Well, in the Western developed world, I would say, or at least that I've heard of.
Well, Congressman Ron Paul fought that fight for years.
Yes.
And years and years, and you saw how far he got. And he's a wonderful guy, and he's very influential, and he got nowhere.
Yeah. Yeah. I mean, do you think if the price rises high enough, it will sort of re-enter the debate?
It's got to be raised to an astronomical level, given the amount of money printing and
Right.
the debt we've taken on. We're buying into this modern monetary theory, the magical money tree.
Yeah.
Just keep shaking it, and everybody is going to be wealthy. It's just not realistic. I think we've gone too far to be honest with you, to bring gold back in. I would love to see it. I would love to see some fiscal responsibility. I don't think, as I said earlier, I don't think politicians are good stewards of our money. I do think that gold will continue to, what's the word I'm looking for? I fill the role that it has for 5,000 years, because gold, even though it's a barbarous relic, it has stored purchasing power for all of mankind, and it continues to do so. And it is keeping up with technology. So there are new and improved ways to deliver it to people very cost effectively, very easily, in terms of internet access to accounts 24/7, 365 a year. So we're kind of democratizing gold. I mean, you can own a position in gold fully backed 100%, unique metal to yourself, insured with no ongoing storage fees for $50. You can take a position, and you can do that anytime, day or night on your computer. So gold is keeping up with technology in terms of making itself available to people that it wasn't available to in the past. And in the past, even when it wasn't available, it dominated the environment I think we're heading into right now. So I think it's positive for gold going forward.
Yeah, on that note, when it comes to sort of technological advancements arriving in gold and the precious metal space, you guys have done some very interesting work with the Perth Mint over in Australia when it comes to gold and precious metals ownership. We'd like to sort of expand on to start with, what this is, and also what drove you to do that in the first place.
That's a good question. Yeah, we designed a program for the Perth Mint right when I arrived 25 years ago, called the Perth Mint Certificate Program. And, Perth had approached us and they said, listen, we have two problems. One, we want to sell our metal into America and Americans buy American. It's hard to compete against the eagle. The other problem was they were paying a lot of money for leasing costs to bullion banks.
Right.
And they wanted to eliminate those leasing costs. And the first problem was very easy to solve. We said, listen, design a product that nobody else offers. In this case, a government guaranteed precious metal storage program by a sound government, the state government of Western Australia. And if people buy into that, these warehouse receipts issued by a state government, then only allow Australian product in it. So that was our end around, if you will, on the US Eagle. The second part was tough. We couldn't eliminate those leasing costs. And a lot of people say, well, why would a mint have to borrow metal in the first place? Well, if you consider a distributor out there wants to buy 10,000 gold kangaroos from the Perth Mint, they call up, they fix a price at current market, wire the funds. They want that metal delivered immediately. Well, where did that gold come from in anticipation of that 10,000 ounce purchase? Well, the mint borrowed it from the bullion banks. They pay a rental or leasing fee.
Yes.
It's not their metal. They make it into different bars and coins of various sizes, and they store it at the mint, waiting for the world to come calling and asking for it. And when they do, it's already made up. They ship it right out the door, and they buy 10,000 more ounces off market at current market, and they start making coins again. That's the way that business works for all the mints.
Yep.
Well, we couldn't eliminate that cost, but what we suggested they do is eliminate the storage fee to the client. So we changed the rentor, if you will, from the bullion banks to the individual investors. If the investor was happy knowing that they had 100% backed unique metal to them, fully insured, no derivatives exposure, no leasing to third parties, if that was all the case, but they couldn't tell you what form it was in day to day, it could be part of a 400 ounce bar, it could be 100 1 ounce gold coins. If that didn't matter, then don't charge them a storage fee. And that cost to the mint is about 0.5 to 0.75% per annum, which is less than the bullion bank leasing costs. So we saved them a lot of money in terms of their previous model and how they did business. We couldn't eliminate it, but we saved them a lot of money. And I get to offer a fantastic product. The client gets to buy metal without a fabrication fee. So just 2.25% above the spot price with no ongoing storage fees. It's a great program, and it was an immediate success. So.
Yeah, and it's one that continues to this day. It's very popular.
Yeah, and we've actually taken it a step further where now we can do that online as well. This was I was alluding to earlier at even lower premiums and lower minimums. $50 and 1% is your worst case scenario, but it's the same metal, fully backed and guaranteed. So it is also one of your best answers to two issues. One is supply squeezes for fabricated coins and bars because the metal is there. It just may not be in the coin and bar you want for delivery.
Right.
So don't take delivery. Just have it stored in the mint in your name. Don't pay a fabrication fee and don't pay ongoing storage and delivery costs, but it's there already. The other thing really good for folks in Europe that suffer VAT taxes, they offer silver and platinum as well. And since it actually isn't shipped into Europe, it's at the Perth Mint in Western Australia, you can buy silver and platinum at Perth and not be subject to those horrendous VAT taxes.
Right. Yeah. Though capital gains taxes would apply, but it's that VAT that's the real killer over in Europe when it comes to buying this stuff. There are some European countries which have very low VAT, but here in the UK, you want silver. I mean, it's 20% up front, so you're already underwater by the time you get it, plus the premium, etc. So it is very, it's a very good way, really, unless you're really crazy about getting it in your hands, which many of our viewers are. But if you want that exposure, it's good.
Boaz, as wonderful it is cost effectively, safety wise, et cetera, it's still my second step. I think if you want to meet your goal of wealth insurance and have something readily at hand for a financial crisis, the first thing you do is you buy it and you take delivery of it and you hold it quietly and close. So if you have that need, you can cash in on it immediately. Anything over and above what you feel comfortable storing yourself or what you feel you need to bridge that gap, put it in the hands of the professionals, and you can do so very safely and cost effectively.
Yeah. And Rich, there's one thing I'd like to ask because it's a very niche thing where I really don't have much expertise whatsoever. But when it comes to some of the offerings that you do at Asset Strategies, you look at older coins, including some of the ancient coins. What exactly is the proposition, and what kind of things do you offer? Because it's a very it really is sort of buried treasure kind of stuff that is on offer here, and people do own it as an investment.
Yeah. So for me, just so you know, I always start with bullion because you're buying it very close to the actual physical intrinsic price, right? But I do like rare coins, numismatics, if you will. Numismatic, just a big word for rare.
Yeah, I know.
Or old, because some of them are old but not rare. And we offer them U.S. coins, gold and silver. We offer world and ancients. The neat thing about these coins is the collectors drive those markets, not investors typically. So there's always a base price, the gold and silver content. Worst case, you could melt this thing down and that's at least what you're getting. So you have a floor to your investment for one, but they're priced typically multiples of that base cost because it's based on collector desirability. And the thing I love about collector coins is it's a very stable market, because think about the mind of the collector. If they have this collection they're putting together, they sought their whole life for this last piece, right? And they buy it. Do they really care what Draghi says or what Biden says today? It doesn't matter. It doesn't matter if they're struggling in the short term to meet their bills. They're going to hold on to that. And typically the next time the market will see it is when they pass on and their heirs sell it, right? So it gives some stability to that market because collectors are driven by a love. My definition of investor is someone who knows how and when they will exit an investment when they buy it. A collector is someone who never has an exit plan. They're only buying it because they want to hold it and covet it, right? So that stability is something I think is worthwhile, and you can see outsized appreciation in that market over and above what you might see in bullion markets. So I like another 1-2% allocation to those rare or older coins. I think it's a nice way to diversify within the complex, but I wouldn't put the same allocation as I would for bullion. That's a mainstay for me.
Yeah. It's almost a speculative kind of position. In terms of the specific ones, I mean, are there certain coins that are in high enough supply that somebody who is just wanting to have a little allocation to, that would be easy for them to acquire?
Yeah, very popular in our market, in the U.S. market, $20 saints. So the Saint Gaudens coin is revered as one of the best designs. It was made by the engraver Augustus Saint Gaudens. So it's the $20 Saint Gaudens coin, and they are so desirable. We talk around the office about what our clients really like, and we'll do an offer for an incredibly rare and unique small coin, a $1 or a $2.50 coin, and it just kind of, you hear crickets when the promotion goes out.
Right.
People want big, bold gold, right? So they're looking for those $20 pieces more often than not. I tend to like to buy them in as high a grade as I can afford before the next big jump in pricing to the next grade. I think that's where you maximize your value. So $20 saints are very attractive and very desirable. The other thing with our offerings that we try to focus on is, I'll give you an example. We call them sleeper coins or spotlight coins. If you look at a given year of production and say there were 3 mints that were producing these coins, the Philadelphia Mint, the San Francisco Mint, and the New Orleans Mint, right? All of them tend to be priced about the same level, but made 100,000 coins at one mint, 100,000 at another, and 20,000 at the third. The one from, say, New Orleans, 20,000 is much more desirable. It's much more rare, but it's priced the same way. If we can find those abnormalities or anomalies in the market and we can get our hands on a bunch of them quietly, we tend to offer them, just a hair above the given premium, and the potential is outsized because the market hasn't caught on to that difference in pricing yet. So those are types of the things that we look for when we make an offer to our clients.
That's it's a sector I'm really, I have very little knowledge on, but it always does seem quite fascinating, especially when it comes to, the ancient coins, when you get real sort of pieces of history. I mean, the closest I would get to is I like some of the older Victorian sovereigns from 1800s and whatnot, and it's crazy that they've maintained their structure, their integrity. They're still very brightly struck and everything, and yet they've still made it here, and you can still buy them for a relatively small premium for what they are, which I find it's interesting that there are so many of them, and that people don't put a huge premium on them really. It always seems to be like an attractive proposition.
I think that market is catching on. I think something that was hurting it for a long time in the U.S., is very subjective on pricing for U.S. coins until the 80s, when the grading services, PCGS,
Yep.
Professional Coin Grading Service, and NGC, Numismatic Guarantee Corporation, came into being. They took that guesswork out. You had a disinterested third party grading these coins and putting a fair mint state grade on them, and then they were bought and sold, and you could trust that. In the UK and in Europe, they've resisted that grading for a long period of time, but they are now starting to grade coins, and a lot of those coins are coming through NGC primarily, but PCGS as well. I think that will do wonders for your market. When I look back, you used to have a dealer that would say, this is an MS 65, a mint state 65 saint, and they'd sell it to you. And then when you came back 2-3 years later, they say, it's not that good. It's an MS 64. And they'd buy it at a severe discount, and they played all sorts of games with customers. And once that's out of the picture, I think investors can trust it, and it makes it a much more vibrant market. I think you're about to see that take place with world and ancient coins.
Yeah, it'll be interesting to see. It's very interesting to see how large sort of an asset class that develops, because there are all manner of alternative investment strategies that we see now, because interest rates don't really exist anymore. So everyone's trying to find yield in all these crazy ways. Be it through music royalties or leasing pre-owned aircraft and all these other ways. It's interesting to see where all these niches that will be sort of watered and be grown during this period. But Rich, it has been a fantastic conversation. Do tell our viewers where they can learn more about what you do at Asset Strategies, and where they can follow you on social media and things like that.
Fantastic. So we're on all the social media platforms, Facebook, Twitter, LinkedIn, you name it. You can reach us at our website, www.assetstrategies.com. assetstrategies.com. If I had to do that over again, I'd make it a lot shorter, but assetstrategies.com. You can email us info, I-N-F-O, A-S-I, at assetstrategies.com. And if you want to call us directly from overseas, 301-881-8600. If your listeners are in the US, toll free 800-831-0007, 10 better than James Bond.
Well, Rich, this has been a great conversation. Thank you so much for joining me.
Thanks for having me. It was a pleasure.
Well, there you have it, folks. That was Rich Checkan of Asset Strategies International. Very bullish price target he's got there, $3,800 an ounce for gold. And it was also good to discuss some of the other precious metals like platinum, palladium, and rhodium, and indeed some of the numismatic coins and some of the opportunities that are in that small space. That's all for this episode. I hope you enjoyed it, and we'll see you in the next one.